Hey everyone, hopefully having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. If you have any trouble or need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics and subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community. We do have a special going on. Special is the coupon code. You can get savings on the monthly membership and the yearly membership if you use that special is the coupon code. Let's dive in, take a look, see what's going on today. Starting with the DXY or dollar, this still looks good to go higher. I'm seeing the stair-stepping pattern emerge from this one, where we come on up and stair step higher. So that looks good and bullish for the dollar to increase. And generally, a stronger dollar coincides with stronger yields. So when we look at yields, the 2-year yield is getting really jiggy with it. You see that big wick at the top there? So we're up in the 2-year, 0.31. We've got that gigantic wick. Usually, liquidity problems are where you get these gigantic movements in the markets. You start to see your bid and ask spread increase. You see large volatile movements, much like we are seeing, in this circle there. So I do think that liquidity could be an issue here, and that's what we're seeing with these big wicks that develop like that. The 10-year yield up 0.65%. That still looks good to go higher, and we are sitting on top of the support region here to move on up. So that looks good to go higher. The 30-year yield also had a little bit of jigginess today with this wick at the top. So that could mean two things. It could mean that we don't have a ton of liquidity. It could also mean, let me look at the daily here, basically. Yeah, there's the big spike there. It could also mean that we've got a lot of selling pressure up there too, which means buying pressure for bonds. So buying pressure for bonds pushes yields down, and maybe they came in, did a little bit of quantitative easing, some bond buying. Who knows what they're doing back in the background there. But to me, this looks good to go higher. We're sitting on top of this structure with less resistance to the upside and good support underneath us. Bond prices are heading lower. As yields go up, prices go down, and there we are heading lower in bond prices. We do have potentially a reversal candlestick, but it's got downside momentum breaking out of this little pattern I've got going on. The 2 and the 10, we saw, again, that massive move in the 2-year yield showed up, obviously, in this chart as well. We were down slightly, 0.33%. Now, this is kind of an interesting mix here. We're chopping sideways with lots of volatility here. We're not dive bombing. Dive bombing generally indicates a problem in the market. Usually you'll see this kind of come down first and then dive bomb. So if you look, you can see before 9/11, you could see a lot of movements coming on down there, and then 9/11 was the big red candlestick. So this kind of fell off before 9/11. This also fell quite dramatically before 2008 crisis. And then C19, we fell a little bit, but that I don't know if this was more, it may or may not be a market-driven event. It was kind of more like they shut things down and then it really dive bombed after that. But again, this is what we've got going on. It's been slowly coming back. We haven't been dive bombing where people are running into the treasury market. So we haven't seen that yet, at least. TYX-TNX ratio is just slightly higher today, up 0.24%. Again, when this goes up, this is generally when gold does very well. It's usually occurs during a slowdown in the market. This is the last one. This is what we've got going on. And right now, everything is prime for gold and potentially silver to do very well. So gold's ripping today. I mean, that thing's up 94 bucks an ounce. Um, I was told by other people that we were going to get this big pullback. I don't know. I mean, this doesn't look bad at all to me to go higher. You could say that that's kind of like a broken little downtrend there. But me personally, I don't play the short-term little market movements here, guys. I do this daily update because a lot of the people who watch YouTube here, they want me to do it. But I look at gold and I'm just like, I wouldn't sell this. It's ripping. I don't know if I would necessarily take a new position here either, but it's ripping higher, and this looks good to continue on up. And I don't see any problems here. I think it looks good to continue higher. And silver, I could easily be convinced to buy a whole bunch in. Um, this also looks incredibly good from a longer term perspective. You've broken out of this kind of consolidation there upward. There's a fractal that I see all the time that looks like that. And I think eventually this is it's gonna run big at some point out in the future. It's gonna be a big, big move. So a lot of people try to time the move. They try to get it perfectly. And um, I've been in this for a while, guys. I saw this opportunity down here. That's where the bulk of my shares, or bulk of my physical metals, I should say, is all in there. And I'm just waiting. And I think we are going to rocket to levels that people are going to say you're crazy. I think platinum's also doing something where we're squeezing up into a corner, and I think it will break out and rip. I can't tell you the exact sequence of events necessarily. I do think it could happen after stimulus, and I think they're stimulating the markets probably right now, behind the scenes, perhaps. Stimulating being perhaps buying bonds or something like that, trying to get liquidity into the market. If they see events or problems in the market, they might step in and do a little something. Palladium down $8 an ounce. We're still in this squeezing pattern, and maybe we can come back here if that follows through. But again, short-term market movements, we're getting towards the end of this. And it's real difficult to get right because you get the big selling pressure, smaller selling pressure, smaller selling pressure, smaller selling pressure. This thing could go at any time to the upside. So when you get to the corners like this, even though we've got a bearish engulfing candlestick that showed up today, which generally means that we could go lower, I usually disregard stuff in the corner here where you get the buying and selling pressure starting to equal each other. So you kind of just have to wait and see which direction it breaks. XEU to gold ratio moving sideways, and we're still at a super low. Nothing's changed. Super low ratio with gold and silver mining companies being cheap to gold. We've got GDX up quite a bit, 3.5%, looking pretty good. Getting some buying pressure there. This kind of, to me, looks like some sort of falling wedge. We've got GDXJ doing something very similar. They're all kind of falling wedges that have formed. And then SILJ up 2.4%. And again, it's a very similar pattern to all the rest. It's some sort of falling wedge. I know a lot of people, they want a chart to be clean and look very nice. I just put chicken scratches on it and say, yeah, they all look roughly the same. And downward facing patterns are bullish, upward facing patterns are bearish. So if you've got patterns where you're squeezing upward like rising wedges, that's bearish. If they are downward facing like these, those are bullish formations. This is an upward one. That's a bearish formation. So that's the pattern there. These are all downward facing. And that is that stair step pattern to go higher. And then you'll get this here is a kind of a consolidation pullback. Crude oil down 2.2%. It gapped lower in the morning quite substantially. There's that gap. And then we came back up throughout the day higher. I should say that was last night when it did that. So it came back up. We'll see if we can hold here. A lot of the times you might get a big double bottom. I think I've talked about that double bottom before. But we need to get some buying pressure in here if we are going to go higher. If we're going to go lower, you would see you would basically see more follow through than what we've seen here, in my opinion. But it could show up. We could see selling pressure show up. Maybe there's some event or news or something that comes out. Maybe Saudi Arabia is going to pump everything they got. Who knows? And I think that's why we were down. Is they came out with some news that they're going to increase production out in the future here. I think it's June. TTF gas down 0.21%. This is still a bearish kind of upward facing pattern. So we could still see some downside. Natural gas in America down 1.13 underneath some resistance, which is on top of us. There's the blue resistance line going across. We do have a lot of demand coming from LNG additions in 2020, late 2025, 2026. So I'd expect this to go up at some point. Our boy XOP, yeah, you know me, down 1.73%. It's holding on at the moment. It looks a little bit uglier on a longer term chart. This is an upward facing pattern. So generally you might have one last dip before heading higher. So we could still see maybe a little bit of selling pressure before that tries to turn. But right now, it's early to say that we've bottomed, definitely way too early. And we could easily see downward pressure with this upward facing formation. OIH down 2.5%. It's holding on for what it is. I mean, we're above support here. But again, we entered this from the top side down. So when you enter this from the top side down, you came on down, your reversal candlestick's that big green bullish engulfing here. We've gone sideways. There's not a ton of selling pressure in here. If you notice, not a large, not a lot of large red candles showing up. That's good for a potential move higher. So right now, we've got this kind of conflicting data where I would say, it looks good to try to go higher. But in the back of your head, it's like, well, we did enter this from the top side down. So we could easily be a continuation pattern where we head lower in the short term. Newcastle coal futures tracking sideways above support, looking a little bit better. In terms of the green guys and the small reds. We've got Sprott Physical Uranium Trust down 2.33%. It's not necessarily a reversal candlestick. It's just kind of a down day. It's not a piercing or engulfing or anything like that. And sometimes you just get a little bit of red days as you come up. And then what we want to see is if it is a consolidation or anything, a sideways downward facing pattern. If it is. Uranium, we're up to almost $70. And that's looking good to continue higher. We've got URA down 0.9%, not much selling pressure there. Just tracking sideways at a little bit of resistance. URNM down a little bit. And then URNJ down 2.45, and that's generally a little bit more volatile. We can say maybe that this is a shoulder, a head, and then maybe it scribes a shoulder, something like that. Who knows? If I were to guess. And that's just getting a little bit of resistance here and getting a little bit of a loop sell-off. Nickel down 1.6%. We're kind of bouncing around next to this big red candlestick. Sometimes that can be bearish, as we haven't had a ton of follow-through upward. So sometimes these like to roll over. Copper up 0.62%. Looking at this guy here, this is still a bearish formation. So we came down, worked our way on up, and kind of like a rising wedge, upward facing. We spilled out of it, and now we've got another upward facing pattern, which we could still sell off to the downside in the short term. The fundamentals of the copper look good, but short term, we're getting a little bit of selling pressure over here. COPX down 0.82%, chopping sideways for the most part. Still looks pretty good on that right-hand side. Lithium down 0.72. This looks good to go higher. These are just flag patterns with small red candlesticks. They look good. REMX down 0.81. A little bit more selling pressure. There's still some selling pressure in here. You can see it in there. The buyers and sellers they're battling it out here. This could be a rising wedge where we eventually maybe sell off a little bit in the short term because we're getting some bearish candlesticks over here, which are bearish engulfing candlesticks. Iron ore down 0.3, been just chopping sideways. We've got aluminum up 1%, but it was in an inverted flag pattern, which is still the case, which is bearish. Baltic Dry Index up 0.71. That's still working its way on up, looking okay. Emerging markets up 0.76. I think we had a weaker dollar. Emerging markets generally respond to that weaker dollar, so that's looking okay. It's moving. Mu down at resistance. We're at that upper end of the resistance here. This looks good to work higher. It's trying. Momentum's to the upside. No strong reversal candlestick. Still looks okay. Carry down 0.36, looking okay to move higher. Nothing wrong there. XHB down slightly, still looks good to go higher. We've got Russell 2000 down 0.82, still looks good to go higher. S&P 500 still looks good to go higher, just a small little down candlestick. NASDAQ still looks good to go higher. I'm just going to leave these, see if what I'm saying is correct or not. SMCI down 4.5%, doing that double bottom still trying to track out a bottom. A lot of the times what you'll see in these is you'll see some sort of like a consolidation, like a falling wedge on this, and then you break the falling wedge. So one hump, two hump, three hump, break out, retest, and then work your way on up. So this looks good. It looks good. And this is your upward facing pattern in that downtrend. This is another upward facing pattern here. And it just came down a little bit. NVIDIA, we are down 0.6%. I put this up there, the trend line of these three hits, three contact points, but it still looks okay. There's not a lot of selling pressure on the right-hand side here. Bitcoin's down 1.6, still above support, still looks fine at this moment. And then Ethereum up slightly, still looks good to go higher. I don't see any reversals, and a lot of the times what you'll do is you'll get a big move upward, and then it starts to come off the rails a little bit. You'll start to get some big red candlesticks showing up, and then usually you'll find like a couple bearish engulfings perhaps at some of these tops where they start to show up, and then maybe you'll get like a squeeze into a corner. MicroStrategy down 2%. It's not a reversal candlestick though, so that still looks okay, and the momentum's still to the upside. The VIX is up 4.3%, a little bit of selling pressure today, causing the VIX to go up a little bit, but we'll see if it starts to elongate the candlesticks. There is a little bit of a falling wedge-esque look to this thing, where we're kind of coming in and we could get a break higher in volatility, which means basically we could see a downward move potentially out in the future if it decides to show up. But that's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website, and that's all I've got for today. So we'll catch you next time. This is Finding Value.